Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's update our view on the gold market. So in general, market shows the performance that we discussed in weekly report. Actually, if you remember, we have mentioned this area where we have a few important indicators. So first is the MACD predictor, but as you can see by the recent action, we haven't got any grabber here. Second is the daily overbought area, and also market here has, as you can see, natural support resistance area around 18 even. So 97 95, 80 even. This is important psychological area as well. So currently market will try to break it up and proceed higher. And if market returns back in this consolidation, the road to the 1835 will be relatively open for the market. Yes, overbought area will prevent immediate upward acceleration, but the ability to reach 1820, 1825 target will be more probable. Currently, guys, I also should warn you about the new driving factors. You probably heard what is going on in Afghanistan, and currently it seems that this political factor starts to make impact on the markets. Just because if you compare the dynamic of the dollar, dynamic of the interest rates in the gold, and you can see that they are growing together. So usually Forex market moves with gold in relation to United States dollar, approximately in the same direction. Currently, we see some breaking of this tendency. While the euro currency stock market shows downward action, gold market is turning up. So it means that it's growing together with the dollar, which is a typical issue when you see the risk aversion on the market. And although currently maybe impact of this factor is not as strong as it could be, but knowing the desire of the bargain hunters from the big bank to shake the boat, they definitely would try to use it at maximum, trying to put the markets in chaos and using this news to trigger the big volatility on the markets. That really could happen. So from that standpoint, gold also could show a bit more aggressively with the upward action. Despite that we have the overbought, despite that we could get some intraday resistance areas, currently it probably could move stronger to the upside. Although it is difficult to say whether this action is based only on the sentiment change that we discussed in the weekly report, or the political factor also starts to work here. But currently, as you could see, the dynamic that is not typical for improvement of the sentiment that we discussed. Soft dollar should support stock market, should support Forex. I mean, dollar rivals, euro currency, Great British pound, Australian dollar, and so on. While we do not see it, we see Australian dollar is dropping, euro is dropping, gold is rising. So stock market is dropping. This is typical for the risk aversion. So that's why I'm just worried about it and have to warn you about this. So now let's take a look what we have on the intraday charts. On the 4-hour time frame chart, market is challenging the resistance that they have specified and is trying to break it up. But, well, from the technical point of view, it seems, it suggests that it should not be a straightforward breakout because market is daily overbought. It could fluctuate around it, it could start forming some consolidation below it, but immediate upward acceleration, well, I would say not possible if we wouldn't have any news from Afghanistan. So everybody understands that Afghanistan has low relation to the United States markets and in general to other markets as well. But this is just the precedent that the issue that big banks try to use. So anyway, currently market will try to break it, but with the daily overbought, I'm not really discriminating and taking the new long positions immediately right here, and probably it would be better to wait some pullback, at least from the technical point of view. It means that on the hourly chart we could consider a few levels where market could show the bounce. Most probable, as we have the overbought condition, these two confluence areas, 1760 and 1745. 1745, 1750, somewhere to this one. It will be logical to see some pullback here out from the level. Still, you consider stubborn action to the upside, as market showing just minor pullback from the OP. So recently we said that if you like to go short, you could consider this level resistance, and OP it could be some pullback here, but it was very small, and just around $15 per contract. And market immediately continues higher. Next target here stands the XLP, the 1825-26 area, and it creates agreement with the fib level that we have, 1828 here, in the upper border of this consolidation. That's nearest term destination point for the gold. And theoretically, with the new background, especially with the support of the political factor, it might be not bad idea to consider taking the long position, but when the market will be out of the daily overbought situation. So some pullback, and after that, maybe the upward action should continue. So that's our view currently on the gold.